the Accounting Standards Board has commissioned 3 academics to gather quite a significant data set on the reporting practices of not just companies but other forms of entity that are regulated in other ways, to see the way in which special purpose financial reports have been prepared, to give the board a feel for the sorts of policy choices that people might be making when they prepare special purpose financial reports, and also broadly to get a feel for how common they are, who is doing special purpose financial reports and who is not, and the prevalence of that reporting. Why are we doing it? Well, we did introduce a differential reporting regime 2 years ago, which is intended to cope with both the reporting requirements of those entities that are publicly accountable, what we would call Tier 1, and who have to comply with all of the aspects of accounting standards, and Tier 2, which are those entities that don't trigger the definition of public accountability. And in the corporate world, they are the large proprietary companies. When we introduced that regime, there were 2 proposals in the relevant exposure draft. One was to bring the 2 tiers in, and secondly, to rule out the use of special purpose financial reports, which was seen to be a market practice that had grown up in the absence of a differential reporting regime being introduced. So once we'd introduced the regime, we didn't see the purpose of a third form of reporting. People who responded to the exposure draft were concerned that we were removing or proposing to remove special purpose financial reporting without adequate research as to whether or not the system was, in their words, broken. As our principal aim when introducing the regime was to give the benefits of differential reporting to entities as soon as we could, we decided to push ahead with the 2-tier arrangement and then to conduct some research into the question of special purpose reporting so we could look at what might be done in the future. So that research is underway now. We are getting some preliminary results back from the first year, but there'll be at least 3 years of data before we come to any final conclusions about the messages that we're seeing. In brief, though, so far what it is showing is that the incidence of special purpose reporting is exceptionally high, much higher I think than most people would have expected. And secondly, that the accounting choices being made by those entities are quite diverse, sometimes quite contrary to what people's expectations might have been, and that those guidelines that exist through the Securities Commission for entities that do special purpose reports seem to be not being complied with in a reasonable number of circumstances. So it's important research because we need to look at the whole question of not only private companies but similar types of entities in other areas. And in going into that research, we thought there were 3 broad outcomes. It might tell us something about the way in which accounting standards should be phrased. It might tell us something about enforcement of accounting standards, and it also might inform us as to where further deregulation might be pursued. Both enforcement and deregulation would be the responsibility of other parties, but as the AASB has done in the past, it's quite prepared to argue the case when it gets that sort of evidence. So we're part the way through the project. It's a very substantial project with large sample sizes, so there's very little chance that the outcomes will not be representative. And we do see that research will go beyond special purpose reporting and provide us with a very strong base for assessing the impacts of any accounting standards on Tier 2 entities.